Hey everyone, good afternoon. China headline? I missed it.
Yeah, 87 acceptors.
So 8075s for 15 watts.
What's up? What's up everybody? What's up Dave? What's up Pam? Bill? Rose Petals? What's up Mike? Rosalia? Jerry? Anastasia? Ola? Good to see you guys. TJ in the house. What's happening? What's up Joanna? Always a pleasure. To the moon. To the moon. Hey Judy. Big Z, let's go, champ. What's up, Ben Linkob? All right, let's jump in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. Thanks, Chris. All trades are placed through T3 Trading Group, all my trades. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I got out of Shopify, got my move, it's into earnings, don't want to keep it into earnings. I got out of Microsoft, got my move, that was one of my ideas for the day today, that worked out really well. I got back into and then out of again Amazon, everything else I still have. So let's excuse me, let's hop over to the videotape, let's take a look at what this market did. So really impressive. SPY's up 1%, Q's up 1.75%. Really impressive with the Q's. That's definitely where the leadership was, helped by AMD and the Magnificent 7. And the IWM here is up 0.5%. Yeah, so, I mean, look, it's a really big up move here for the market. If you look at the SPYs and the Qs, they're testing that upper band of equilibrium, the 21 EMA. The SPYs here are back to their 200-day. The SPYs are back above 420. That's a key prove-yourself level for bulls that we had discussed that they need to get above and hold above. There still is room for a higher low, a lower high to come into play here. That creates a pivot for downtrend continuation. As we know, into these up moves, into these bounce backs, your pivot area could be anything from not even quite touching the ADMA all the way to as high as even piercing through the ADMA and then pivoting back down. So this is a big win for bulls today. I wish that breadth was broader. I wish the IWM participated a little bit more. It's still a really big win for bulls, getting almost back to the 21 EMA for the SPYs, getting to the 21 EMA for the Qs. Qs recaptured the very big 352, 353 area that it broke down from. IWM, I still think is disappointing. Obviously also green, how could it not be with the way the market moved today? But only up about 0.5%, just barely ticking above the ADMA on the daily chart on a closing basis, nowhere close to that upper band of equilibrium. So it's more representative of your average stock that's out there. Or you can look at the RSP, which is a similar story here, where RSP also given a bounce back from being negative on the year at this point, but still a lot more potential room for this thing to bounce in order for it to clear back up. It's got to get back above 137.50 to start looking good. That's where it broke down from. 21 EMA still all the way up at 138.25. So, big rally today. On the one hand, it's like I kind of want to take a little bit of a victory lap. I started loading up, really Thursday, Friday of last week, and against kind of my technical analysis judgment, I did a lot of heavy adding yesterday. I gave a very bullish afternoon meeting yesterday where I was talking about my thesis, my thought process as we're getting into the beginning of November. I correctly called out that I thought that we were going to get more of a dovish pause today than the market was looking for. That turned out to be correct, and it really helped to boost this market up in a big way. So on the one hand, I feel like everything I called for the most part here worked perfect, and it was all exactly correct, and I'm getting the bigger move that I'm looking for. On the other hand, I'm frustrated with my name selection more than anything. For the amount of an up move that we had today, my P&L is nowhere near where it, air quotes, should be. I thought that when the real rally comes, which is partially predicated on this TLT rallying, and I know TLT did rally today, but it did not get back above $85. I thought that we were going to see kind of the opposite. It was still the Magnificent Seven that really ripped us higher. I thought that either the rally would be very broad-based, everything's included with it, big caps down to small caps, or I actually thought that some of these IWMs and growth names would lead on some interest rate relief on a pop if we got this dovish pause, which we got. So, again, on trading is very, very hard to be exactly perfect in this business, I'll tell you, because if I had a perfect crystal ball yesterday when I was doing the afternoon meeting, and you could just show me what today's SPY daily candle looked like, I'd be like, oh yeah, I am gonna get absolutely paid tomorrow, and it's gonna be incredible. But then at the end of the day, even though I actually think I traded pretty well today, I just got a whole bunch of swings that are still negative on the day. Which is frustrating considering how high the market is. I had an upgrade in JD today. At JD, although it held 25, still closed red on the day. Chevron, obviously, here is disgusting. It's starting to build out a bear flag. It closed on lows. It's one I'm still in. A lot of these growth names, very disappointing. This OSTK failed breakout at $16, and it never recovered this morning, finishing nice and negative on the day. This Penn Entertainment, 20 is a really important level, snapped through it, but also failed back down, closed negative on the day. Even like this KRE that I would have expected would give a really big move today off of the Fed and everything, still couldn't clear $40. So even though it's up 0.5%, I'm looking for this KRE to be at 41.50 today, and my P&L to therefore be significantly higher from the swing position that I have. So, again, it's like on the one hand, part of me wants to take a victory lap just for seeing the market itself so correctly over the course of the last few days. On the other hand, I'm like, man, I am just not involved in the right stocks here for this rally, at least not yet. So we'll see what happens. Sorry, I'm still getting over this little chest thing from that cold I had when I was in Africa. We'll see what happens. There is still a very real opportunity for this market to pivot down in this equilibrium zone, right? So don't get too excited, don't get too enthusiastic yet. It's a great oversold rally of a market that was very beaten up. There is, I think, room for more to happen. It shouldn't really happen in a straight line up. We'll see what happens tomorrow. The day after a Fed day is oftentimes a trend day, as the market takes the time to digest everything that the Fed said, and the big money managers really begin to position themselves around that new information. So we'll see what happens tomorrow. We could still trend up. We could still trend down. The bulls are not out of the woods yet, but they certainly have recaptured some very key levels for the SPYs and Qs. It's productive, but we are by no means in a reversal pattern on the small time frame yet. If anything, we're still in small to intermediate time frame downtrend continuation mode where you could get the pivot high to come in. With that said, as you guys might have guessed, I'm still bullish. I'm still very heavy long. I'm still looking for more. But I have to recognize that markets tend to not work in straight lines. This is a really big move from Friday's low. On Friday, we were just at 409 in the SPYs. Now we're all the way up here at 423-ish or so. That's a very big move in a short period of time. Even if we are to continue higher, a lot of times you need a reversal pattern to actually build out. You need some backing and filling to come in. At a certain point, maybe we can shoot a little bit higher tomorrow. Again, the day after Fed day is oftentimes a trend day. It wouldn't be inconceivable for us to trend up to 426, even 427 in the SPYs. But at a certain point, even if the reversal is going to come, you need a reversal pattern to come into play. We don't have that yet. Reversal pattern, that can happen in a lot of ways. There's many different types of reversal technical patterns, but it's always in one form or another going from a pattern of lower highs and lower lows to a pattern of higher highs and higher lows. We haven't done that yet. In order to see a pattern of higher highs and higher lows, We need a higher low to come in, and then we need that last previous pivot high to actually break to confirm a higher high. Then you're actually in a reversal where you can, potentially work your way up. Now you're looking at an uptrend. And I still would note what I've been saying the last couple of days, rising 200-day for the SPYs, rising 200-day for the Qs, still bodes well for the really big picture of the market. I want more participation. And I guess the TLT still didn't break through 85. We closed at 85. Let's see if the TLT can get back above it tomorrow. Maybe that gives some relief to the IWM here and some of the mid caps and small caps more, but we're still not really getting participation in the way that you would want from the average stock that's out there. I would assume, and I don't have any way to measure this, but considering that the SPYs here, see Josh, considering that the SPYs are up a percentage point, if you could see what breadth is, advancers versus decliners today, versus historically when the SPY is up 1%, I would assume that we're looking at a historically very low number of advancers versus decliners versus or along with a 1% increase in the S&P. Just a lot of names still not participating, some sectors still not participating. So we'll see, but overall, obviously, big steps in the right direction. Great calls from our team here, I think, to get more bullish at the right times. Microsoft was fantastic today. It did exactly what we were looking for. Netflix was okay, and I'm going to say okay. It was on our radar because it hit that news when we were doing the morning meeting that made the entry, much more difficult. But that one was on the list for continuation. Shopify was great today. If anyone did take it, I know that they have earnings tomorrow morning, so that was a reason to not take it. But this was on the list after the false breakdown yesterday to see if this can get some upside continuation in conjunction with an upgrade that it got this morning. Heck, even AMD. I said I wasn't going to trade AMD this morning, but we did highlight in the morning meeting that $99 is the level. So you easily could have bought the breakout of through $99 in AMD and caught yourself a 9-point winner on that, which is very nice. So yeah, a lot of great calls. A couple others weren't as good. This OSTK, again, this was one of my calls for this morning, was very disappointing. False breakout through 16 off the open, led to failure, stayed weak all day despite what the market was doing. And that one was on my list, and that one was a focus for me today, and it just did not work out. But, happens. You can't control what the market's going to do. You can only control your actions in regards to the market, right? So that's really where we're at. I think everything on the Fed was relatively straightforward. It's a dovish pause. As far as I'm concerned, he basically said he's done. I know he didn't directly say that he's done, but that's what I was personally reading between the lines. So, last time I feel like the market started to sniff out that maybe the Fed was done. It did lead to a massive overall rally in the indices. So we'll see if anything like that can happen again this time or not. TLT definitely has some work to do. The dollar UUP here being above 30, still a little bit of a concern, but I like the intraday failure on the dollar today as well. So that's all I got. I know there was a lot going on today. There was a lot of information, but that's really all I got. Pretty straightforward. So I'm happy to answer any more questions that you guys have. I'm happy to dive into any detail if anybody has any questions about what happened today with the Fed, or what happened with the Treasury at 8:30, or what happened with the JOLTS report at 10 a.m., or what happened with PMI at 9:45. There's a lot going on. Yeah, Dimitri saying that right as I'm saying it. Don't forget that the Treasury and Yellen announcement at 8:30 is also bullish for equities. Yeah, and I remember also thinking that the market should be trading higher on that than it was. And we were very sloppy at certain points intraday today. But the Fed then really woke us up. This IWM was all over the place. This opening sell in the IWM had me so frustrated these first 10 minutes. And then this reversal, which got boosted further at 10 a.m. somehow, even though that JOLTS number coming a little bit hot actually had me nervous. Getting us all the way to above 165. Then we were extended up there, and 165 is an important level. almost to come back down to new lows intraday. We didn't quite break them, but basically came all the way down to lows just to then close at highs again, which is really impressive. Cameron asks, can you explain why that is bullish? Can I explain why what is bullish specifically? I'm not sure which piece of information you're referring to.
Do you see what I'm saying? Like, yeah, we disagree, but
The Treasury announcement?
like, your way is
Sure. So
less efficient, right? Like,
I could scroll up and find it, or if anyone's able to repost what Pat posted at 8:30, just down here in the VTF, so we can all review it together. I'm happy to explain it. It'd be easier if we can do it with the numbers, if someone can repost, but I can start without even saying the numbers. Thanks. Pat's gonna repost it for us. And I would also say, oh, thanks, Dave. Dave got it for us. I would also say Pat's note. I'm trying to remember if it was yesterday or today. I think today was the one where he was talking more about the yen. Somewhere in Pat's note, either yesterday or today, I don't remember if it was that first portion or if it was in one of the Goldman institutional parts of the note. Got into a lot of detail on all the factors that are affecting the bond market right now. But again, happy to go over it. So let's read these numbers out loud together. So U.S. Treasury boosts refunding by 9 to 112 billion, which is below the 114 billion estimate. Boom. I mean, that's really all we actually need, and then it gets into the specifics of how much it's going to auction per, the 10-year note, 30-year bond, and the 3-year note. So the bond market works just like every other market in terms of supply and demand. So who are the suppliers of bonds? Well, obviously it's anybody that's selling. It's anybody that owns bonds and can sell. So I believe we've seen a lot of foreign governments, including China, actually be net sellers of bonds recently. So that's supply. But at the end of the day, the largest amount of supply that comes into the bond market is from the Treasury itself. Right? Why does the Treasury issue bonds? They do it to raise debt in order to fund the government operations. And obviously, one of the big topics of discussion recently, but it's honestly also been a topic of discussion my entire career and probably my entire life, has just been, the amount of debt that the Treasury actually has overall, and especially the recent conversation has been around with rising interest rates. It becomes more expensive to service that debt. So that's becoming a problem. But I don't, no point in getting into all that. But basically, supply and demand. So the Treasury needs to sell a certain amount of bonds each, period, each month, in order to be able to fund the government. That selling is supply. So more supply and equal demand means that your stock, or in this case, your bond price, goes down. And the interesting thing is, so who's there to actually soak up that supply? Who's coming in and buying it? Well, it's foreign governments, it's pension funds, it's hedge funds, it's regular people that want to own what has always been considered to be a risk-free asset and get risk-free return. For a long time, up until somewhat recently, it's been one of the biggest buyers has been the Fed, right? That's what QE is. QE is the Fed actually coming in and acting as a buyer of treasuries. So right now we're in an environment where the U.S. government is having to issue even greater supply of treasuries because the debt has gotten so out of control, our spending needs are so out of control, and we've got less buyers out there. Because instead of China, which has been a very big buyer of treasuries for a long time, being a buyer, they've actually been a seller for several months now. I don't know if that's changed in October, but we've seen the data that like all summer for sure, China has been a very big seller of U.S. debt, and they hold a massive amount of U.S. debt. So they're not coming in and buying right now. If anything, they're potentially adding to supply, or at least that's what they've been doing. The Fed's not coming in and buying right now. So who's coming in and buying? There's definitely people coming in and buying who want exposure to be able to lock in these higher rates. For years and years and years, you'd be buying, bonds and getting a negative real return, and now you can get a really nice return and a positive real return on treasuries. So, there's people, honestly, like you and me, who are taking long trades in TLT because interest rates have gotten so high. So that's where some demand is coming in. But again, it's a supply and demand story. And what does this note say? What happened at 8:30? Well, the estimate was that the Treasury was going to refund by 114 billion, so 114 billion worth of supply. But they decided they're only going to refund by 9 to 112 billion. So that means that's significantly less supply that's actually going to come onto the market versus expectations. So what happens then? Less supply equal demand. The TLT, or the bonds in this case, can move higher, which means that interest rates go down. And Dimitri summed it up here in a perfect little equation for you. Less supply of long-term bond issuance equals lower rates, which is bullish on the long end of the curve and bullish for risk assets. What are risk assets? Well, risk assets include equities. It includes U.S. equities. So that was also bullish in addition to the Fed today. So we had a lot of ammo this morning that is potentially bullish for equities, and obviously equities followed through with that, though the average stock did not necessarily, because there's still reasons to be fearful. Even if the Fed is pausing, you still might have higher for longer. Unlike what we've spoken about recently, a lot of these companies are going to have to re-raise debt in 2024, but more like 2025 and 2026. They're small caps and mid caps, and if interest rates are still very high at that time, it could be so painful that it could lead to the demise of some of these unprofitable small caps, mid caps, startup companies, things like that. But I also think that some of these names, a lot of these names, are trading very cheap as a result. So. And that's always the argument when you're talking about stocks that are cheap versus stocks that are expensive, and we've spoken about this in a lot of afternoon meetings recently as well. Like if you look at, I think, a lot of these IWM names right now, from a fundamental perspective, and this is why fundamentals, in my opinion, are not enough to be like a successful trader, investor, anything. You really need to learn to understand and read charts, because charts tell you truly supply and demand, and that can be more important, because stocks can be cheap for a reason, or stocks can be expensive for a reason. And we've discussed here that maybe some of these IWM names are cheap, but they're cheap for a reason, and that's because when their debt rolls off, they're going to have to raise new debt, and they're not profitable at significantly higher rates that can negatively impact potentially even those companies as going concern. Versus if you look at Microsoft, we've discussed, Microsoft's got a high multiple. It's still at these prices, I believe, higher than its recent historical average. By recent, I don't know, go back 5 years. But maybe it's justified in doing so because of the amount of cash that they have on hand versus the amount of debt that they have, and the fact that debt is locked in at 3%, and it's longer term debt than what your average small cap and mid cap is actually dealing with. So, I want to see some of these cheaper stocks wake up. I want to see this IWM wake up and work its way back up towards that 21 EMA, in conjunction with a little bit of a relief coming from the bullishness of the Treasury at 8:30 and the Fed today at 2 o'clock, if you want to call it that. So, I appreciate the question. Whoever asked it, I think it was Cameron. What's PayPal doing here after hours? PayPal's up after hours. It needs it. It needs it. Next question in here is from Rosalia. As a newbie, I don't dare to bet on earnings reports. How should I trade it after the reports? Should I wait until the next day and go with the market direction? Yeah. So I think that's exactly what you should do. I don't think that new traders, that entry-level type traders, should trade after hours, pre-market or post-market. There's much less liquidity. Certain order types don't work. You can get stuck in positions, and if you're stuck in a position and you're trading something that's on earnings after hours and it's moving against you, it can move against you very, very fast, and you can potentially lose a lot of money. So I think that's something that you want to get some experience under your belt, at least 6 months to a year of experience before you start doing anything pre or post market hours. My general rule, and this is definitely a general rule, it's not something I necessarily always follow, my general rule for trading earnings is to trade them in the direction in which they're moving. Earnings names, they just had an event. When there's an event, your big institutional players that are involved in that name, they have to reposition themselves around the new news. So that means that you have a lot more buying or a lot more selling than you typically do. You have a higher range than the stock typically trades. You've got higher volume than the stock typically trades. And with that institutional buying and selling that's coming in, the moves can really last. So again, as a very general rule, trade the stock in the direction in which it's moving. You still have to have an actual trade setup, and it's not as easy as just, hey, my stock is moving higher, so I'm buying it. My stock is moving lower, and I'm shorting it. Though for some hyper scalpers like Judy is able to be disciplined and do a really great job with those momentum style trades of just buying high to sell higher, shorting low to sell lower, and you know, keeping the stop loss tight and keeping the risk tight and just going with the direction of the stock. When I'm doing that, I'm also doing it in conjunction with certain factors that we always pay attention to, like extension on different time frames. Like I like that trade when that 80 EMA first, like you get the, you know, early bull flag or something in the earnings name, and then the 80 EMA catches up, and the 80 EMA catches up on that 5-minute chart, and then you get continuation as a setup. But yeah, you're spot on with what you're saying here with your question, and I appreciate your question. So keep them coming. That's how we all learn. And I just want to make a comment also, actually. You know, you started your question here, and I hope you don't mind me calling you out. You started your question here saying, you know, as a newbie, blah 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 with your question. I was, you know, kind of emailing back and forth with someone today who, you know, basically said something like, you know, when I was new in the VTF, like I didn't dare ask questions because I was such a newbie that I was dumb, and my questions would be dumb, and I don't want to waste everybody's time. Please be selfish. Everyone in here, be selfish. Ask your questions. If you're a brand new trader, you're a newbie trader, you think you might have a dumb question, ask the question. That's the only way that you're going to learn. It's the only way that you're going to get better. And if it's a very basic beginner question and someone who's listening to the answer is an experienced trader, it's an opportunity for them to review their fundamentals. And believe me, trading is all about your fundamentals. So I really appreciate you putting yourself out there, Rosalia, with the question, and keep them coming. That's how you are going to get better. Big Z saying, I was concerned about the weakness of AMD over the past few months, and I completely missed out on the AMD trade today. So did I. I didn't have the confidence on the AMD trade today. What is the mindset if you're looking for a reason to go long AMD at the open? So I think like you, Big Z, you know, the way that I trade, I draw opinions on things. I create a thesis on something, you know, based on. Oh, sorry, just sold a little bit of Palantir on the offer. You know, I will sometimes let my thought process almost get in the way of a trade. So for me, for AMD, I'm a little bit concerned about the chip stocks being expensive, and the earnings report I thought was fine. I thought it was okay. And in some earnings seasons, stocks go up on just fine or okay earnings reports. This has not been that earnings season. In this earnings season, they have been primarily smoking down stocks that have had just fine earnings reports. So I really didn't want to be involved in AMD today. I did communicate in the morning meeting the levels that AMD had established in the after-hours trading yesterday, and the after-hours trading is important in liquid names that trade heavily after hours. So after hours, immediately AMD traded down to 93.50, where it found some support, and then roughly you had resistance at the price in which it closed, which is about $99. So I basically wrote down those levels in the morning meeting, and I also wrote down the pre-market support that we had this morning, which was about 95.70. It's a simple breakout trade. $99, is the intraday resistance level. You put your opinions to the side and you say, oh look, it's an earnings stock, and like we were just saying with Rosalia's question. Trade in the direction in which an earnings stock is moving. Oh, look, it's an earnings name. $99 is the breakout level. It's trading up into $99. I will buy $99 and I'll put my stop loss at the ignition bar low, at the low of the day at $98.50, and take 50 cents risk on the trade. That's all you needed to do. That's all you needed to do to get involved and crush this entire trade, is not have an opinion on it like I did, but that's just who I am at this point in my career. I have opinions on things, and I struggle a little bit to trade counter my opinions. Not have an opinion on it, just trade the technicals, buy the breakout, and boom, that's it. Otherwise, there were some other little setups in here. Maybe you had this little bull flag in here with this inside bar at the end, where the ADMA was catching up, where you could have bought that for continuation. However, it's a little bit tougher of a trade. I don't like this setup here too much. You get the inside 5 in the second bar. I love the inside 5 and up in an earnings name, but not when it breaks that low necessarily. It broke that low. I know it's just a retracement back to the ADMA, so technically you could have bought this as a pivot low into the ADMA. I think that the buy on the third 5-minute bar of the day in AMD is doable but difficult. This might be a little bit easier of a trade, but the time of the day here is difficult for me, honestly, to take 5-minute continuation patterns. So I see very visibly 3 trades in AMD. The best and easiest, in my opinion, is just the $99 breakout of the intraday resistance. But you also could have been looking at this pivot, or technically the break of the inside to the inside 5 to the upside. Though again, I don't like the break of that low, or this bull flag pattern here. And there's 3 opportunities right there to be able to get involved. And you just got to be focused on the technicals, because again, for me, looking at their earnings report, and clearly I was wrong on what the market did with that. The earnings report made me nervous to try to go long listing today. Appreciate the question, Mr. Big Z, from Rex. I took 2 trades this morning. One was Netflix and the other one was Microsoft to the long side. Both stocks had an inside. So both of these are on our morning radar today based on the daily charts. This Netflix chart I think looks fantastic. Post earnings, it's based out. ADMA's caught up. Inside day yesterday in front of the resistance. So we said it in the morning meeting right before the news came out. 412.50 as a buy zone for an inside and up. They ended up gapping up above that, so that was more difficult. Microsoft I think looks great. We talked about this in the morning meeting as well. I did not like how Microsoft fully filled its earnings gap, but we're taking that with a grain of salt, because Microsoft. Because that was the day that they destroyed all of big cap tech. They sold everything. So it's really recovered since then, with the first inside and up, and now the second inside and up, and kind of recapturing 340 and recapturing some key levels. So we had both of those on the radar today, Rex, so your focus is on the right spot. Your first trade was in Netflix on the second inside 5 at 945. So you're buying the break of the shooter. We call this a shooter, 2 inside 5s in a row. I really like this pattern. You have a stock that's had news. It's above resistance. It was very strong off the open, but then it took 10 minutes after that to time correct, which allows the ADMA to catch up. And then you're buying the break of that inside 5. Let me reread this. The Qs and the SPYs were also moving higher. I remember when I called out the trade, you mentioned that you wish the volume would be higher. Okay. Yeah, in hindsight on these consolidation bars, the volume always declines. So Maybe that was a mistake in my saying that, but okay. Could you explain a little bit about it? Yeah, so again, maybe there was a small mistake on my saying that, because within, inside bars and consolidation, the volume should come down. I still just would want to see, like, I want to see the volume come down in the consolidation bars within the confines of consistently higher overall volume. Like the overall volume on Netflix, just eyeballing these 5-minute bars versus the last couple of days, it looks the same as it normally does. So I like when a stock is overall giving elevated volume compared to what it normally does, even if there is a downtick in that volume in a rest period, which is exactly what should happen. It's a downtick from already elevated levels of volume, if that makes sense. So, not the end of the world by any means. Maybe not the most ideal situation either, as far as the volume goes. So that's probably what I mean by that a little bit. To me, I thought the volume was not that bad. The opening volume is pretty decent. Yeah, normal. Turns out I got stopped at the 10 a.m. candle low. Okay, yeah, so you use the first inside, the tighter inside 5 as your stop loss, which is certainly fine, especially after the ADMA catches up. So you got stopped out. If you happen to use the outside bar, then you would have been okay. But it was tricky this morning. Again, the IWM was so tricky this morning. The difference between how the SPYs and Qs versus how the IWM was trading was so tricky this morning. And I have consistently been finding that the opening trading sessions with, what we've seen a lot with 0 DTE is opening weakness followed by afternoon strength. And that's a tougher environment for me. It makes a lot of that opening price action just a lot trickier in general. And that's what I like to do, most of my trading personally. So, I'm sorry that you got pushed out on Netflix, but I think it was the right idea and a good trade. Your second trade was Microsoft. I remember you calling that one out, and I liked it. At 10 a.m., the break of the inside 5, the bull flag as the ADMA was almost catching up, trying to get continuation there. After the 10 a.m. number came in, the Qs took to new highs. Microsoft broke the 5-minute bull flag, and the ADMA of the 5 cut up. I got stopped out at the second candle pullback after that broke the consolidation low by 20 cents. Can I give you some feedback on it? I think it's also a great trade. I really like it. I think there was a lot of volatility that came out with the 10 a.m. number. I don't think the market knew how to react to it. I didn't know how to react to it. I'm surprised the market was able to be as strong as it was off the JOLTS number coming in slightly hot. After what we saw last time, a JOLTS number came in hot. This one wasn't as bad as the last one, I don't think, but it was still, more job openings than expected, and in theory that could be pretty bearish for the market. So I didn't know how to react to the market at 10 a.m. when that came out. But you can see here, if you look at the Qs, when the market was also trying to figure it out before it eventually resolved to the upside, there was a lot of volatility in here for 15-20 minutes. Some of that volatility included a decent downtick. I just think it was the market trying to figure out what to do after this JOLTS number that created that little market downtick that also pushed you out of Microsoft. But I think that both of those are solid trades. You're focused on the right names, above levels, with good intraday patterns. Your head's in the right spot. Dimitri letting us know that some of the bond auctions went poorly, so they're prioritizing bills over bonds. So in other words, the small time frame, the smaller time frame stuff. From Ben, I took 2 inside 5s in tech today. One was Meta at 942, and one was Microsoft, the same one that we just went over with Rex. So Meta, I remember you called this out, and I liked it also. First bar is nice and green, second bar is a rest bar, third bar is continuation. You may have gotten pushed out of this one also on the break of the inside 5. Tough. This is tough. And in Microsoft, you put your stop at the low of the potential pivot instead of low of the inside 5 to be more correct. I ended up getting stopped out on both of these trades. I'm not sure what you mean by potential pivot. So you bought it at 10 a.m. Potential pivot just being this low? like the lowest low, and not the inside 5 low. Oh, so the bull flag low. I would call it a bull flag low. Yeah, and it shook out, which just sucks. We kind of went over that a little bit with Rex there. That you're using a different stop loss, but I think your stop loss is also appropriate. I think it's very appropriate. I like your stop loss. And Meta, we can see how you got pushed out, which that just sucks. You barely got kicked out of both of those. You and Rex just getting shaken out of stuff that worked really well today. It was a tricky morning, I thought, once again, still. Any advice of how I could have not lost in these trades or how I could take them again after getting pushed out? No, I don't. So, I don't have any adjustment that you could make that would have made this a profitable trade for you without getting stopped out. And I would not advocate repurchases. I really would be very hesitant about getting pushed out of a trade and then rebuying it, finding ways to rebuy it because you think you got shaken out. Every once in a while you'll be right and you got shaken out, which is what happened in both of these today. Plenty of other times that is not going to be what the situation is. Plenty of other times you are pushed out for a reason because the trade is failing and rebuying compounds the loss. So again, unfortunately, I think both of you guys really did the right things with your trades, and we work on a game of probability, and sometimes that's what happens. Yeah, Palantir's up decent after hours. It might just be moving as a secondary to some of these other names. Dennis given some advice on trading earnings. In terms of earnings, what helps a ton is adding in earnings AVWAP. What is the AVWAP? What's the difference between the AVWAP and the VWAP? Are they both? Oh, the anchored VWAP. Got you. Yeah, I know my buddy Brian Shannon, who I spoke to a bunch when I was in Vegas, when we were both presenting together out there, is huge on that anchored VWAP, and I listened to him talk about it, and I'm decently sold. With that said, I don't have it on any of my charts, or regular VWAP for that matter, on any of my charts. But I can see how it's a very, very powerful tool. VWAP it tells you who's in the money, who's out of the money. It tells you if the average market participant is in the money or out of the money. That makes a big difference. And it's also a really important tool that's used by institutional investors just to actually purchase or sell very large orders, which can also help make it a little bit of a self-fulfilling prophecy because you've got enough big institutional players that are buying or selling on the VWAP or on the anchored VWAP that it makes it a very powerful tool. Again, I don't personally use it. I keep my charts very simple. I do not use a lot of indicators, oscillators, or anything like that. But I can definitely be a proponent of the anchored VWAP. Yeah, Ben Boak is here saying that there's probably other newbies who have the same questions, and I agree with that. Also from Dennis on a question, what are you personally using the 8-4 and on what time frame so I can reference? Sure. So I use an 8 and 21 EMA on every time frame, and they're very important to me. The way in which I use them is that I consider the space between the 8 and 21 EMA to be technical equilibrium for any stock or market that I'm looking at. And for me, that's a very important concept in helping me judge extension, helping me judge where counter trend moves should move to. And that's a lot of what I was talking about in the beginning of the afternoon meeting today, when I was talking about the degree of the bounce that we've now seen in the SPYs and the Qs. SPYs and the Qs getting to, so in a downtrend, the 8 EMA is what I would consider to be the lower band of equilibrium. The 21 EMA is what I consider to be the upper band of equilibrium. In an uptrend, if we go back to June, July here, then it becomes the opposite. The 8 EMA is the upper band of equilibrium. The 21 EMA is the lower band of equilibrium. The space starting at the 8 EMA and ending at the 21 EMA is the space that I broadly consider to be technical equilibrium for any stock or market that I am looking at. Markets work in periods of expansion and consolidation over time. So you get, again, just going back to June here, you get your up move that creates extension, Extension can always become more extended. However, eventually extension needs to correct, and you can get that through time or price. What I'm referencing right here in the beginning of June, the market gets extended after a big 2-day move. Then you move sideways, which is essentially a bull flag for 4 days. That's a time correction. ADMA catches up, you get continuation. And then here on June 15th, we had more extreme extension away from that ADMA. You got your price correction in this case. That price corrects all the way down to near the 21 EMA, to near the lower band of equilibrium before you get your pivot. So in reverse here, because now we've been in a short-term downtrend, this is a great bounce back. This bounce back could be the beginnings of a reversal, but you don't really want to bet on that as a general rule. We don't want to bet on reversals. It's a great way to lose money in the long run. The better bet is usually trend continuation. That becomes a little bit trickier when you're dealing with differing trends on multiple time frames, which I would argue we still are dealing with. A large time frame uptrend, but small and intermediate time frame downtrends. But if the small and intermediate time frame downtrends are going to continue, this is the area somewhere between the 8 and 21 EMA where we should pivot. Sometimes it's shallow to the 8 EMA, sometimes it can even overshoot the 21 EMA. But that's broadly how I utilize those. And what I've been saying a lot recently, just because we just had it on Thursday, Friday last week, a very consistent signal for 2 years now has been whenever the SPYs or Qs become $10 extended or $10 away from the ADMA on the daily chart, from that upper or lower or first band of equilibrium. That could be on the upside, like it was back here on June 15th, or it could be on the downside, like it just was recently on October 27th. But that has been a very consistent time to begin to look counter to the movement, because the degree of extension is becoming so extreme, and it's worked really consistently. Any reason to use the 8 and not the 9 or the 10? I do 9 and 20. No, to be honest with you. It's the one thing I like to think that every single thing that I do with my trading has a very concise rule around the why, and that it's all reasoned out. And the one thing about it is the 8 and 21 EMA for me is I don't have necessarily a great reason. So 8 and 21, they are fib numbers, but I don't care about fib numbers. So, you know, they're fib numbers, but I don't care about fib numbers. I mean, I pay attention to retracements, but I don't believe in magic numbers. Why the 8 and 21 is very simply because when I first started trading 13, 15 years ago, the mentors at that time or whatever that I was working with said, hey, you should use an 8 and 21 EMA on your charts for reference. Over the years, though, I learned to use the 8 and 21 EMA in my own unique way. I don't necessarily know of anyone who teaches to use the 8 and 21 EMA as an equilibrium zone and a tool to understand and represent equilibrium in the way that I do. It's a very important part of my trading. That 8, as far as I'm concerned, could easily be a 9. The 21 could be a 22. It could be a 20. I think it's just how your brain and eyes actually learn to get used to those charts. What's the difference between, you know, one's an 8 period, one's a 9 period, or one in your case is a 20 period, one's a 21 period. It's not that big of a difference. I don't think it really matters that much. It's going to create slight differences in where those lines are on your chart, but they're tools. What I am a very adamantly against, which I see a lot of especially newer traders think that it works this way. Moving averages are not support and resistance. Sure, sometimes a chart holds a moving average, right? They are not support and resistance. They're squiggly lines. They're averages. They're tools. So if you use that tool properly, and that's how I utilize it, it's a very big assistance to my trading. Appreciate the question, Dennis. Nice stuff, Judy. Glad to hear that you had a great day. Awesome stuff. BTC's moving after hours? Bitcoin? Bitcoin up decent after hours. Rex, don't get that thought process in your head. It's not how it works. No one cares about your trade. Any opinion on SEDG? So they just came out with earnings after hours. I saw that it got posted, I think, in the VTF, and I did not read it because I was getting ready to do the meeting. Or did it get posted in the VTF? I'm scrolling up now to try to find it. I see Clorox. I see PayPal. I see DoorDash. I see Etsy. I see Airbnb. I don't see. Oh, there it is. SolarEdge halted for news pending earnings expected. That's all we got posted here. I haven't seen the numbers. I can't really give you any opinion without seeing it. They're still crashing the ticker. I got no opinion for you. This thing is destroyed. And I guess it's back to where it was in 2020. It's below 2020 COVID lows. I got no opinion for. I don't know the business very well. I don't know the company very well. I don't know what the earnings report. Oh, Pat just posted it. They missed by 28 cents. They missed on revenue. They guided revenue below consensus. Watch out. Yeah, that's not a good report. I don't know what caused the big gap down here on October 20th either, because I don't really follow the stock. If that was an earnings warning, if it was, then maybe they pre-released it on that date. Yeah, so then I don't really know why it's getting as smoked as it is after hours on that. I've seen this happen before with Snap though, where these companies pre-release, get destroyed on the pre-release, then report and get destroyed again on the report. So it's almost like I don't know why these companies even bother pre-releasing. Just take the pain all at once. So yeah, I don't know. I got no real opinion for you on it, Eddie. I definitely have seen that happen before, though. I saw it happen with Snap. So just be careful. Don't think that it has to go back to 75 because they had pre-released and it is already priced in. From my opinion and from what I've seen in practice, doesn't necessarily work that way. Whew. From Lath, I know you like looking at bounce back plays when there's $10 of expansion on the SPY and Qs. For individual stocks that you have a similar percentage move that you like to look out for, no, I do not. And that's because, so that rule I have with the SPYs and the Qs on that extension is significantly more difficult to implement on individual stocks. Because individual stocks move on stock-specific news. You can have an individual stock be down 50%. You can have an individual stock getting destroyed, it's down 20%, and next thing you know, you're thinking it's extended because it's down 20%, it's down 50% because it's trading on a specific earnings report, specific news, something like that. It is significantly more difficult, I don't want to say impossible, but it's probably borderline impossible to have that happen on the index level. Which isn't to say that, $10 is not a hard, fast rule. And I like to reference, so it created a phenomenal buying opportunity that we took advantage of here with both hands. But you can take a look at when Russia invaded Ukraine and what the extension was on that gap down that morning. Let's zoom in. It's right here. So the day before the Russia invasion, the market was so we had so much conviction. This was a phenomenal buy in 2022 that I know I made a lot of P&L off of. We had so much conviction to buy that gap down on the Russian invasion that day because they were already pricing it in for 4 days straight. The 4 days leading into it, they were destroying the market because the invasion was imminent. So on the day before the official invasion, we closed at 422 with the ADMA at 435. It's already $13 worth of extension. Already $13 worth of extension. And then the next day, we gapped down. Whew, man, we gapped down over $10. And you thought the $13 of extension was a lot? The next day on the invasion, we opened up below 411. Let's just call it 411. with the ADMA at 433.80, let's just call it 434. So we opened up with $24 worth of extension. And we were buying the heck out of that because not only was it $24 worth of extension, it was news that was already known. Everyone knew that this invasion was imminent before it happened. And then it actually happened, and it was just a phenomenal buying opportunity. So again, it is not to say that you're looking at the SPYs or Qs at $10 worth of extension and say, I'm buying max buying power right now because it has to go directly up to the ADMA. It does not work that way. Markets that are extended can always become more extended, and this was a perfect example here. But it's particularly true with individual stocks because they trade on stock-specific news that can affect them to just such a greater degree than it can when you're looking at all the stocks combined at once. So you can still, and I'll do this once in a while, especially if there was a big move that happened on no news. And I don't like doing it with small caps, but the big names like an Apple, Google, Amazon, there have been times in really, really big moves on some of those names where I look at how extended we are and I measure it, and then I just kind of will reference back over the last year just to see previous historical instances of large extension and how much it gets to, just to give me an idea of what has happened in more typical situations in the past. But it's a much, much more dangerous game in individual stocks, and I don't think you can have those same kind of hard, fast rules there. But it's a great question. Cool. Looks like I got through the questions in the VTF. Yeah, Roku's continuing to crush it here. Over to YouTube. High Volume is asking me for thoughts on Tesla for the long term. Tesla's on my stay away from list right now. I think it's been, since this recent earnings report, the worst of all the big cap tech stocks. I still think it's very expensive. I know Dimitri has very much a short bias. I'm seeing it out of the corner of my eye. It's a very hard stock to short, and I'm sure Dimitri can even admit that it's a very hard stock to short just because of how this thing has traded in the past. But yeah, it's a broken stock right now since that earnings report, and if you're thinking on the long side, I would stay away from it. If you're thinking on the short side, that's my preference based on the technicals, but I'm very bullish on the market itself right now. So if I'm right on my bullishness on the market, I don't want to be short Tesla, which is, a very high beta stock that has massive movements, and even with the chart being kind of broken here, if the entire market continues higher like it did yesterday, like it did today, then you're probably looking at Tesla going higher. But it's not one that I want to buy. From Gabriel, also in the YouTube. I know you recently closed Pinterest, but do you like it long? Yes, if the ADMAs catch up. The answer is yes. If you look at the weekly, you can see that there's a 6-month base building in front of 28 to 30. I like Pinterest a lot. I cleared out my position in front of the earnings report. I'm pretty sure Pat still got it. You got this huge base that's here. It's starting to break out of it. I expect that I'm going to be back in Pinterest at some point in the relatively near future when this thing resets up. Whew, all right, exhausting day today. Exhausting day, but good day, wild day, exciting day, fun day. We were totally on the right side of the thought process with the market. So big shout out to the team here because everyone else out there is bearish. And we came in on the right side, and the thesis was perfectly correct in front of the Treasury today, in front of the Fed today. So awesome stuff, everybody. The bulls, with that said, still have a lot to prove. They're not out of the woods yet. 21 EMA here. It's IWM still not participating the way you need it to, but it's a good start. So have a great night, everybody. And tomorrow's the day after Fed Day. Maybe we'll get a trend day up. Maybe we'll get a trend day down. We'll assess the gap in the morning and try to figure it out. Have a good night.